flip my mind to say, this is possible for me if I show up every day and I take deliberate daily action. This will be possible for me.
Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
Hello and welcome to another episode of the Gentle Art of Crushing It. I'm your host, Sean Graham, and today I have with me a friend of mine, Brandon Hicks, a fellow self-storage investor, going full-time now and previous mechanical engineer. Brandon, welcome to the show, man. How you doing?
Great, Sean. Thanks for having me.
Yeah, so super excited to have you on here. We have a mutual friend of ours, Dave Morgia, and we got connected and basically found out that we were really doing the same thing. We both, were previous W-2 employees, and we discovered self-storage, and we have gone full-time into self-storage. So I just wanted to talk to you more about self-storage. We'll dig into everything, but what else can you just tell us, give us a little bit about your background?
Yeah, so you mentioned W-2 mechanical engineer. So I went to school in Massachusetts, where I'm from. I live in Mass with my wife, Shelby. We both went to UMass Amherst, and I went into mechanical engineering, and I worked in that field for about 10 years in the consumer electronics space. So I was doing new product development, working on brand new products, headphones, speakers, things like that. And that's kind of what got me into real estate, was working kind of crazy hours during COVID, and ended up getting burnt out, and said, you know what, I got to do something different. I'm not sure what that is, but that just sent me down a path of learning, reading books. I never used to be a reader. Now I'm very much a reader, because I saw the power of, I read Rich Dad Poor Dad, and that just blew my mind. And that's how I found real estate, and that's kind of how I got here. So
Awesome. So where did you go to school?
Yeah, so I went to UMass Amherst.
Okay, sorry, you mentioned that. Okay, UMass Amherst. So, and then you did mechanical engineering there, and
Yep.
then your previous job you were working at Peloton. Is that correct? I see the Peloton in the background.
Yep. Yeah, so I worked at Bose for about 8 years, and I was at Peloton for just under 2 years.
Got it. Awesome. So, what did you start getting into self-storage? Was it 2020? Is that what you said?
The story there is that I was working on a product that was launching in the fall, and normally we would travel for prototype builds. So we'd go to China or Mexico or wherever the build was occurring, and we couldn't do that with COVID. So we had to do that, figure out how to be successful remotely. And so that meant a lot of very late nights, weekends to get that done. Because normally we'd be on the line, we'd be putting product together, we'd be learning like firsthand what works and what doesn't work, and then we'd come back home and then we would iterate. But we weren't able to be there, so we had to do things over video and pictures, and it was just not nearly as efficient as traveling. And so that's what really led to the burnout. Really, it was months of doing that. And so then that's when I said, I got to do something different. And so then I started reading. I read Rich Dad Poor Dad as that first book, like I mentioned, and that's where I was just learned about assets, liabilities, passive income. I had never heard of any of those terms, and I thought that I was financially savvy, but really sure. I was just budgeting. I wasn't an investor. And so I ended up reading a lot of books, but not taking action. So I have a very much analysis paralysis background. I'm used to looking at the data, and I had looked at a few side hustles in the past, but I didn't take action on them because I would just learn, but really not. I wouldn't front the money. I wouldn't take that leap. And so at this time, though, because of going through the burnout, I knew I needed to do something different, and I was really motivated to get out of that situation that I was in. So I ended up joining a multifamily coaching program and having a one-on-one real estate coach. My fear was that I would continue to analyze real estate, but not take the action. The amount of money that's involved, the amount of money that you could lose and risk. That wasn't something I was comfortable with, so I needed coaching, and so that's how I got into real estate. and then eventually my coach was transitioning into self-storage, and then I ended up joining him on a deal and then another deal, and then I brought him into my third deal. So that's how I just kind of fell into self-storage.
Awesome. Yeah, it's funny. I was in the during COVID. I was in the like alcohol beverage industry in my W-2, and there's certain industries that just they went crazy, right? I think Peloton was one of them. If you were in exercise equipment, if you were in alcohol, and then of course real estate, overall did very well during the COVID years as well. So, but it got very overwhelming too. It's just I don't know. During that time, it was just more. As more time went on, I knew I wanted to get out and just focus on real estate, and that's what I really wanted to do. And it sounds like same thing kind of happened to you.
Exactly. I felt like I didn't have control over my schedule, and that was really the first time that it hit me. Of course, if I look back to the previous 8 years, yes, like, you had a certain hours you needed to work, and if there was extra work that needed to be done, you'd work late and you would do it. And I was I was happy to do it. I didn't know any other way. But then it got to the point where I think, pushed past my limit, where I was like, my wife was sitting on the floor eating. That's when we would have dinner, because I had a conference call from 9 p.m. to midnight every night, including weekends. And so I was working right up to dinner, and then we'd eat dinner while I was on the phone. And it was like, man, I felt like I had no control. And that's what really, really bothered me. And I was like, all right, I think I was 29 at the time. I was like, okay, so I've got another 30 to 35 years of this. And I don't see that changing. So I need to do something about this if I'm not happy with it. So that's how that was the kick in the butt for me to look at something different.
Totally get it, man. I agree with you. At the end of the day, I think, in my opinion, right, it all comes down to time. Like time is what it's all about. Is being in control of your time, and it's not about not working. It's about working on what you want to work on, what makes you happy, what you're passionate about, and just being able to like be there for your family, whether it's your spouse, your significant other, your kids, and just focus on that. So there's a lot to be said for transitioning out. I think that's a big move you made. It's also not easy, right? It's hard when we're trained our whole lives, like, hey, you go to school, go to college, you get something, really good degree, you go, and I did accounting, right, engineering, similar things where it's like you're trained to go work for somebody really the rest of your life until you're, in your 60s and you retire. So what, I guess, taking that leap, right, like moving out of the W-2 world into just full-time real estate, like I know you had done a deal and stuff, but like what was that transition like, and what was it like for you and your significant other?
Yeah, so I think it had been, ever since I had that where I burnt out and I found real estate, I was pretty set on this is the direction I need to head. So for a couple years, my mindset was already in the I will very soon be transitioning into full-time real estate. That was my ultimate goal because of the freedom of, I was looking for financial freedom and I was looking for time freedom, and that was the best way I could find to achieve that. And so over that, I'd say year and a half, that's where all of my energy was going into that. So I had made an LP investment to just learn about syndications. And then I had did the joint venture with my coach on a self-storage facility. And so I started kind of like dipping my feet into these types of deals, to the point where I then felt confident enough I hired a virtual assistant. I know I've talked about this, where I have with my background in engineering, I have like more systems and processes, like logical, like mind. And so it was like made sense for me to go build this process and this system and then hire someone to do it. And so that's what I started working towards. Actually, exactly a year ago is when I had started that. So I had figured out how I wanted to look for deals, what types of deals I wanted to look for, how we were going to get the owner information, how we were going to call and reach out, whether it's direct mail or cold calling. Right now for us, it's just been cold calling. But I put that whole process in place, recorded step by step by step, and my VA and I have just been working on that throughout the entire year. And
Love it.
and so we were able to find a deal off market within, it was about 6 weeks. And that was really like my first deal that I had put an offer in on, that I had gone under contract with, ever had to talk about, interview attorneys or anything like that. And so that was really my first deal. And I could see that, if this deal closes, which it did, that I would have positioned myself to be able to walk away from my W-2 if I wanted to. And so you had asked like what that transition was like. It was, we were in that mindset for about a year and a half. And so it felt very right when the time came. And so for the last couple of months now, I've been working on, before I was trying to do real estate on the side, either before work or after work. And now it's more about managing my time efficiently throughout the day. And I haven't had an issue with that. I can hold myself accountable. Now it's just, am I doing the right things? Am I doing enough of the right things to hit my goals in the time frame that I want to hit? So that's been the focus, and also trying to keep myself from working too much.
Right.
Not working. The reason I wanted to get here was because I was working 14 or 15 hours a day without control.
Yeah.
I don't want to do that to myself now on my own. So protecting that has been something that I'm constantly thinking about.
Yeah, speaking of so how do you handle that? Because for me personally, I get very caught up in what I'm doing, and I love what I'm doing, and I love analyzing deals, looking at deals, finding new deals, and going. And I get a high out of that. It's fun to me. I really feel like I'm where I'm supposed to be, but at the same time, right? Like the purpose of this is to have time to be able to be there for my family. And there's times where I find myself, it's like, hey, it's 7:00 and my wife's making dinner and I haven't helped. I'm still in the middle of a deal, and it's hard to like transition out of that. And then when you stop, you're also it's difficult sometimes to move over, right? And to be present and to put that aside, that deal that you're working on or the problem you're trying to solve, and to fully move into being there, right? Just being present, like with your family. I don't know if you've run into the same things, but just how do you handle that?
Yeah, so I've been time blocking. I've tried a number of things. I've tried written calendars. I've tried writing it in my journal. What has worked for me, although I still am always tweaking it, and that was something I needed to learn as well, is I thought I would just pick one thing and it would just work. And then when it wasn't working, I was thinking, maybe I'm not cut out for this, coming up with all these silly beliefs or whatever it is. And it was really, I just hadn't picked the thing that worked quite well for me. But the thing that's been working the best so far for me is time blocking in my Google Calendar. So I said, I'm going to wake up at 5. Now I had a stretch where I was doing that really well, and it wasn't, I kind of fell out of that. I got to get back into it, but I've got to figure out what's more sustainable. Maybe it's not quite waking up that early, and or maybe it is. I have to figure that out for myself. Like I said, it's like an ongoing thing. But every day, the night before, I try to do it around 5:00 because I don't want to wait too late. But around 5:00, I will pick the 4 or 5 things, usually 5 things that I want to accomplish for the next day. And then I'll time block them. And I'm usually doing 45 to 50 minute blocks of increments throughout the day. So a couple in the morning, then I'll have time to exercise and have breakfast, and then a couple in the late morning, and then 1 or 2 blocks in the afternoon. And when I follow that well, I feel really good. I feel like I don't feel rushed. I feel like I'm in control. But if I wake up a little late, then I'm all of a sudden it's like I'm behind. And so that's what I'm trying to work and improve on for myself, is I don't want to set a schedule that I'm always behind on and always feel behind, because then that's when I'm like, well, I need to make this up at the end of the day, and then I work later. So this is something that I've been constantly working on and trying to find little tweaks here that make it sustainable for me. So I've been working on it for a year now.
Right. There's no perfection. It's just constantly a work in progress. For me, what I found that helps a lot is, it sounds like so simple and obvious, but just having a calendar link, like rather than me just trying to always staying in reaction to the next email, the next phone call, it's like, hey, here are my available times. Click on my calendar, book a call with me, right? And
Right.
everything's not open, right? Because I have, I have time blocked just like you. I have time blocked off for things that I have to do with my family. I have time blocked off like in the morning, things, deep work that I want to get done. And that's super important, right? Is to put those on your calendar and block off the time for yourself. I think what the hard part is though, when you're doing a big deal or, you're doing a syndication or you're just taking on, you're just getting close to closing, there's a lot that relies on you, especially in that couple weeks leading up when everything is just getting wrapped up with bank financing, all reports, and, you're really just working to get that green light to actually close with the title company. And so then that stuff for me, it kind of goes out the window because it's like, well, I have to do this. It relies on me. This is, it's like you have to be in more of a reaction mode. And that's a difficult part, but I think that's just part of the process too. I think as time goes on, you build a better team. That's the idea, at least. You build a better team, and you really again gain more control over your time. But with people like you and me, when we're in these, we're still in the stages where yes, we have virtual assistants, we have people who are helping us, we have partners. I partner a lot. I'm sure you do. It sounds like you do as well. So all that helps, but at the end of the day, you're still very heavily relied upon.
Right. It's like you feel like it's all hands on deck. You got to answer the call whenever it comes in, even though you might have said I'm not taking work calls after 6 or whatever it is, but you still do it. And I would gladly take that over, you need to be working 9 to 5. So that, it's definitely a step in the right direction. And I think also if that that's important to you, that you really don't want to be, working after 6, but a deal comes along and something has to be answered after 6, I think you could start thinking about what process you could put in place or what team member you could delegate this to maybe answer that question, and whether it gets pushed off to the next day or if it needs to happen now. I don't think you're going to get away from that entirely, but you can, I think, be constantly working towards that. Right.
So just, I guess if you want to, let's talk a little bit about teams and partnerships, right? I think a lot of people, they see a huge deal and they're like, well, how would I ever take that down on my own, right? The deals it's millions of dollars, whatever, if it's $5 million or 10 or 15, 20, it doesn't matter. You only have so much money, so many resources, so much time. So how have partnerships helped you, and have you done any deals just solely on your own, or is everything you're doing with either partners or syndications?
Yeah, so I had wholesaled a deal this year in self-storage, and it was on the smaller side. It was under $1 million, but okay. I still needed partners, and I still needed a team. So I had pulled in, because it was my first deal. I knew that I could I do this by myself? Yes, but I'd be opening myself up to some risks that I just didn't know about, and I just didn't think that was necessary. So I brought in a mentor on the deal, and basically had negotiated and said, hey, I think I've got this great deal here. I'd like to pull you in and give you a piece of the deal in return for your expertise. I'm not asking for you to bring any money to the table. I'm not asking you to sign it. I'm not asking for your balance sheet or anything like that. I just want you to help me. You need a survey. You need a phase 1. Now's the time to be talking to an attorney now. This is something you do need to worry about, but that's probably not something you need to worry about, or maybe it's not. Don't worry about it right now. So I brought in partners just for that. And my team was relatively small. I also, I needed a sizable down payment that I didn't. I could have outlaid, but then I would have tied up a good amount of my money, and I didn't feel like that was a safe thing for me from a personal finance perspective. Yep. So because I was in a community of real estate investors, and I had built up relationships over the course of 2 years, I felt very comfortable to go to somebody that I had a relationship with, and ask him if he would join me in the deal. And we were going to split roll in this is what I'm looking for. I need help with asset management, or I need help with, managing the CapEx and all these things. And even though it was on a smaller deal, I still had a team put together of four to five people, and that doesn't count I had an attorney, I had, a few other people that were guiding me along the way and providing, and I had property manager pulled in as well. So there was the primary team, but then there was also this extended team, which ended up being, 8 to 10 people in total.
Right. Yeah, it's definitely a team sport. It's not like going and buying a residential house and you just kind of like do it by yourself. Well, not that you do that by yourself, but you have a realtor, and maybe you have a closing attorney. But with this, a lot of times you have to partner. You don't have to, but it's good. You're trading. You're giving up some equity, but it's almost like an investment, right? It's a short-term investment where it's like, yes, you are giving up equity, but in return, you're gaining confidence and you're gaining experience. So the next time this deal comes around, like, could you partner with somebody again? Yeah, but also there's a much better chance that you feel comfortable enough to take this deal on your own. And so you're giving up something in the short run, but in the long run, you're going to build a lot more equity and just have more ownership and be able to do more deals altogether. Exactly.
And I think another thing you want to consider too is you're pushing yourself outside of your comfort zone. At least for me, I had never put an offer in a deal, never had it under contract before where I was the primary principal. And so if I said, I can do this myself, I'll figure this out on my own, I would have been taking on some risk that maybe the deal fell through. Maybe I lost a good amount of money. Maybe something else happened that I didn't think about that I could have avoided. How long could that have derailed me for if I ended up to say the deal fell through and I lost my at-risk capital and I lost 20 grand? Would I be ready to go find the next deal, or would I be demotivated and have to get myself back out and pick myself back up and get back out there? How long would that take me?
Yeah.
Over a few percentage points or whatever it is on the partnership, like, it just didn't make sense to me. It made much more sense to just partner, reduce risk. I learned a lot in the process too, from my partners with the things that they were thinking about.
Right. So let's talk more about this wholesale deal that you did. I remember some of the details, but I don't remember everything and how the partnership structure worked. And how did it work out for you? How did it work out for the seller? And how did it work out for the person you assigned the deal to?
Yeah, so we found that off market. I mentioned my virtual assistant was cold calling, and we came across an owner who had an interest in selling, and so I gave him sent him an email, we just coordinated a date to meet next week, and we toured the property, and I got some financials and ran the numbers, and I thought, this looks like a really good deal. Started digging more into the market and really felt confident about it. And that's when I brought it to my mentor, and he looked at it with his partner and said, yeah, because my mentor was not so much on the analysis side. He actually had a partner who did did their underwriting, and so he worked with his partner on that, and his partner said, yeah, this is a good deal. We should move forward with this. And so we negotiated on that. And my intention was to buy and hold. Right. That's my first and foremost priority in real estate, is to buy and hold facilities. What I started to learn throughout the process while we were under contract is there was a little bit more work that needed to happen in terms of CapEx. So that was increasing our CapEx budget quite a bit. And it was becoming, like I said, a very construction-heavy project that I was getting a little bit, nervous on, just because of my experience level. Just because, it was, I didn't have a construction background. I had never run a construction, like a heavy project like that. And so I started thinking, maybe this might be a better opportunity for somebody who has that experience. And so that's why we started looking at that.
How big was this facility?
It was just under 10,000 square feet.
Okay, so it wasn't a huge facility. Okay.
It was not a huge facility, but it had room to expand quite a bit. So there was a lot of value add potential, but it it was going to cost a good amount of money to capture that value add as well. And so that would have been even more money that I needed to bring to the table. And so it was growing into a much bigger project than I had originally anticipated. Maybe with a little more experience, I would have foresaw that. But that's one of the things that I learned in that process.
And so I don't know how comfortable you are with talking about like details and numbers and stuff, but one thing that stood out to me with this one was, if I remember correctly, from a price per square foot level, that's something that I look at a lot, right? If it's something's over $100 a square foot, I often just dismiss it. I don't really look at it. And that's because, when you're building like a new like Class A climate controlled facility, a lot of times like with land and construction and everything, you're talking about $110 a square foot, like all in. So with this deal, I don't remember exactly what the price per square foot was, but I think it was fairly high. I don't know if it was like mid 100s or so, but to me, right, like that would have worried me a bit, and I would have turned away from the deal. But you saw something in it that nobody else did, and then even beyond that, somebody else said, yeah, like we'll pay you even more than what you had it under contract for. So I mean, share as many details as you want there, but I'd love to kind of get your thoughts there, because at the end of the day, people want to look and find deals and know if they are deals or not. And everybody has different criteria, but myself included, it's like, well, hey, maybe I shouldn't filter out a property just because it's $150 a square foot. So what do you think?
Yeah, so it's been a little while, so I don't remember all of the details. I'm trying to rough them out in my mind, but I think price per square foot was under 100, but it was not too far under 100, and I'm trying to remember now. So I do look at price per square foot, but I use it more as I don't use it as a yes or no. It's just like a nice to know, and then I see what else the deal can do. And so the things that I really liked about that deal, one was the website was really lacking. It was not updated. It looked like it was maybe 10, 20 years old. I liked the location. It was on a main road. It had high visibility. I liked that the rents were they were under half of what the market was.
Oh, wow.
Yeah, so it wasn't just a 30% bump like we were talking about, 100% bump to not even catch market. Wow. So it was, there was that, and then occupancy was also low and could be improved because it was just not run as well as it could be, as we expect. So I think it was in the 60% range. So we had the opportunity to fill up, we had the opportunity to raise rents, and we had the opportunity to expand. And it was a great location, and the supply, I did the secret shopping, and all of the facilities that I had called, I knew what my average unit size was, and I'd say, hey, I'm looking for a 10 by 10, and they're like, I don't have any available right now. Yeah. Maybe not for a couple weeks, maybe not for a couple months. And I kept hearing that from the market. So that was telling me that the demand was high. And on top of that, we were half of what the rents were. So I knew that there was a good upside. And so that's why and then it penciled. So with all of that, it made sense to me to move forward.
Got it. Yeah, that makes a lot of sense. I think one thing that you mentioned in there, which is really big, is location, right? You're talking about it's on a main road. It wasn't in a, I think it was in the Northeast, right? I don't know how big the city was or anything.
Yes, it was up here in the Northeast. I don't remember the exact population size, but I usually am, I go on to Radius Plus, like I'm sure a lot of storage investors do, and I'm usually looking for 30,000 people in a 3-mile radius, and it more than exceeded that. And so that all of the criteria, so household income, that I'm looking for, it was good. It was good there. Population density, it was good there as well. Population was at least flat. It wasn't declining. So it had all of those market characteristics that I look for and made sense to me.
Yeah. And a lot of times too, right? I'm in the Midwest, so I'm looking at a lot of properties in Michigan and in Ohio, and that's going to be different. The Midwest is going to be different than the Northeast. You know, when we're talking about a price per square foot. So what somebody is willing to pay, you know, in an area like just real estate in general, all right, it's a lot different.
Yeah, like I said, I don't remember the exact numbers, but rent per square foot, the smaller units were pushing near $4 a square foot.
$4 a square foot in rent.
On like a 5x5, I was seeing competition up near $4 a square foot.
And you're talking about on a monthly basis. Wow,
yeah,
that's crazy.
And I was seeing like on average, you know, but you know, because that's a relatively small unit, 5x5. For up here, I think generally I was seeing more in like the 10x10 range, but those were even, I believe, $2 a square foot. So the rent per square foot was pretty high.
Yeah, that's really good. I mean, just to put that into perspective, if I'm going to do a new development, you know, I want climate-controlled units to be like at least $1.50 a square foot. So when you're talking about, were these climate-controlled or non? Non-climate controlled. And you're saying like, okay, hey, some of them are getting $4 a square foot. I mean, that's just insane. So it sounds like an incredible deal that you found. And go ahead.
Oh, I think timing was also good. I mean, with COVID, I mean, we know like the demand for storage was quite high. And so rents were getting pushed up quite high and occupancies were also much. I think that I've heard the general like number for vacancy or for occupancy and storage is around 85%. But during COVID, we were starting to see in the low to mid 90s. And so these numbers were all getting pushed up. And this was right around that time frame too. So I'm sure there was some, you know, I'm sure that was part of the reason why we were seeing like, I mean, those very high rents per square foot. I was surprised, but you do the market, you do the secret shopping, you check online, you see what they're actually going for, and then you confirm that they're actually filling those up, you know, and sure enough, they were.
Wow. That's really cool. So after that deal went through, that was when you basically decided to transition out of your engineering position and go to real estate full time. And we talked about this recently. It's been a weird time, right? Like all of a sudden, not all of a sudden, but slowly over the past 3-4 months, interest rates have risen quite a bit, right? Like last year around this time, we're talking, I closed a couple of deals in December last year. Those were SBA loans too, which typically have a little bit of a higher interest rate, and those were 5%. So, commercial, if you went to a local bank, you could probably get 4% or, maybe even less. Now, interest rates, I'm hearing 8%, 7.5%. Like it's kind of crazy because from a seller's perspective, right, it's all a matter of expectations. And so their expectations were set, the mom and pop owners, they were set at, getting 5-6% cap rates for their properties. And so for us, like if we want to go buy a new property and the seller wants to sell it at a 6% cap rate, but our interest rate, we're getting the debt at like 8%, well, that's a 2% spread in the wrong way. We're not like, it's not cash flowing, it's negative cash flowing, right? It's not, it gets very difficult. So I've just been wondering, like, what have you seen? What have you seen recently in terms of what people want for their properties? Are you seeing anything where it's like, yeah, self-storage people, and sellers are coming down on their prices. They're starting to adapt to the new economic environment that we're in. What's it been like?
Yeah, so I've been putting out a few offers, and I've been either doing, when I send out an offer, it's either 2 or 3 different offers at once, and usually that's including a creative finance, 1 or 2 creative finance options. And the reason I'm doing that is because I'm not able to come close to their asking price with the interest rates the way that they are. Right. And I had talked with a few owners just last week, and I was hopeful, but they weren't very motivated. So they were willing to do creative finance for they were willing to seller finance a portion, like a small piece, like 20-30%. And I was excited about that because I had a strategy that I thought I could make this work. But even with that, the rates that you mentioned, the 8%, I talked with a few lenders and mortgage brokers, and they were saying if you want fixed, we're talking about 7.5% to 9%, somewhere in there. And so when I underwrite that way, it was like, even though I felt great that I could get the seller finance portion, I thought that was going to be enough for me to get the deal done. Once I put those terms in, it killed the deal. And so what I'm finding is that I think sellers currently are still this is December, so I think they're thinking that wishing that they could have got the number that they could have got maybe 6 to 10 months ago. And if they're not really motivated, they're like, you know what, I'm just going to hang on to it. I mean, that's exactly the conversation I had with one of the sellers. He was like, I had something close 6 months ago. He's like, but if I have to hold on to it for 2 years, like, that's fine. I'm ready to retire, but this is pretty low amount of effort for me at this point. So I'll hang on to it to get my number if I need to. So I think, the trick is to find that motivated seller who really wants to get out of the deal for whatever reason. Right now, I've just been talking with people who are willing to work with me, but not super motivated.
Yeah, it's tough. And thanks for clarifying. Yeah, at the time of this recording, it is December 2022. So again, we've had big changes over the past year, just in terms of like interest rates and banks' willingness to take on risk, and just the terms they're able to give. I've seen the same thing. It's kind of, people say, yeah, we'll seller finance like 10% of the property, 20% of the property. Well, that's great, but it doesn't help when you're paying 8% interest on 90% of the property, or 80% of the property. It's really hard to do deals that way.
Yeah, I've been seeing where they'll offer the 20 to 30%, but they still want, reasonable terms, like what we could have gotten 6 months ago, 4%, 25-year AM, but they want a balloon in like 5 to 10 years or something like that. And a lot of us would love those terms today for sure. But when you pair it up with like the other 70 or 80% of this, the capital stack is coming from, is coming at 8%, 9%, it's still really difficult unless they're reducing their price or they're willing to lower their price.
Yep, I agree. I've had a decent amount of investors who are in different asset classes come to me to talk to me about switching into self-storage, right? And I'm not talking about like passive investors. I'm talking about active investors who maybe do syndications or they're general partners. And so they'll be in apartment complexes or mobile home parks or short-term rentals. And, they say, well, hey, there's nothing in my asset class now. And so I've been thinking about self-storage for a long time. It's just too competitive in the apartment complex industry right now. So I want to switch over to self-storage. And it's like, okay, like, cool, but why? Like, what are the problems, right? Because a lot of times, you're just trading asset classes and you're starting over completely, but you're not eliminating the problem. The problem is the current environment, right? The problem is the interest rates and where they're at. So it's like, yeah, why are there no mobile home parks available? Okay, because sellers, they want too much. They want the same prices they were, getting a year ago. Banks interest rates have doubled since, a year ago. And so basically there's no deals out there. Well, if you come over to self-storage, you're likely going to find very similar issues. Plus, you're going to be starting over completely. You're going to be learning a new industry, and you're really just adding problems, not really solving problems. So, first of all, anybody who wants to come into self-storage, I think it's a phenomenal asset class to be in. That's not what I mean. But if you're already an expert in mobile home parks, it's probably better to stick to mobile home parks, continue on that path, but also, switch up your strategy internally, right? Like a lot of times, like, you're gonna have to figure out how to seller finance deals. That's just the way it is. if you go to self-storage, you're going to have to do the same thing. You're not going to go get, it won't make sense to go get a bank loan at 8% and you're buying the thing at a 6% cap rate. It just, are there deals that could make sense because there's that much value add potential in them? Yeah, sure. But you're also, you're taking on a lot of risk, and you have to be willing to finance or to personally cover that negative cash flow for, hey, it could be a year before things lease up. Which also kind of brings me to another point, is that it's been a little bit different in terms of self-storage facilities and management with supply and demand. Last year, it seemed like demand was just through the roof, like really filling up. You could just continue to raise rates and they're filling up immediately. More recently, the demand hasn't been there as much, and I think it's kind of a somewhat of a trickle-down effect, right? Where, yeah, your interest rates have risen. People aren't selling their homes. They're not moving. And if they're not, if they're not moving, there's not as much demand for self-storage, right, as there was in during COVID or during 2020, when people are moving all the time. They're buying vacation homes. People are getting out of the cities. It has been, the less movement there is, I think, in the residential side, then the less demand or turnover there is in self-storage, and that has an effect on management. So what have you seen there?
Yeah, so I've been hearing kind of this similar things. We talked about the occupancy in the 90 to 95% range for 2021 and maybe early 2022. I'm starting to hear that come down under closer to the 85 to 90% number, which is, my understanding, is historically where it's been, which I'm thankful, because when I've underwritten all my deals, even when occupancies were up in the 90 to 95% range, I've been sticking at 85%, because I don't want to assume, who knows how long those numbers were going to stay for. They were certainly higher than what we've seen historically, right? I mean, I've only been in storage for a year and a half, but if you listen to others that have been in the space for quite a while, 85% seems to be, in general, and this is very market specific, so I'm sure some markets are more or less, but in general, I've been hearing 85%. So it'd be silly of me to assume 95% in a pro forma for 5 years if that's not where they historically have been. So I've been hearing that. I've also been hearing that rates have been dropping. As I do some market research on deals that I'm interested in, you go into Radius Plus and you can see how things have kind of changed over time, and I've been seeing them come down there.
And you're talking about rental rates, like at self-storage facilities.
Yes, rent per square foot. Yep. Yeah, and I do agree. I know that a significant portion of the customers in self-storage are people who are moving. So, and that's not everybody. There are some that just have extra stuff and they want to have it there for a period of time, and that is some other percentage of the customer base. But a good percentage of the customers are transitory, people who are moving from one house to another, moving from one location to another. And we saw a lot of that in 2021 with a lot of people from the Northeast kind of moving away from the big cities or moving south. It's no secret that populations in Florida, Texas, the Carolinas, Tennessee have all shot up quite a bit, and a lot of them were coming from my neck of the woods here in the Northeast. So, right,
yep, that makes sense. So I guess what are you focusing on now? What are your next steps? You have a cold caller, somebody who's helping you with your CRM, and that's somebody virtual, and they're calling, still contacting facilities. You said you're given multiple offers, and that often involve seller financing. But where are you seeing your next, I guess, deal come from, or profit come from in this current environment?
Yeah, so I really narrowed my focus quite a bit recently. I was a little bit too broad in the beginning of the year, although we did, that is one way we were able to find a deal. I think following migration patterns, seeing where the majority of people are moving, and knowing where that's happening, I've decided to narrow focus to a handful of states, mostly in the Southeast, and narrow my property criteria as well. So right now my focus is 20,000 to 50,000 square feet with a value add component very similar to what we had talked earlier, whether it's raising rents, improving occupancy, improving online presence through website, SEO, maybe paid advertising, whatever that is.
Yeah.
And if there's room for expansion. So we're looking at any of those value add opportunities in the 20 to 50,000 square foot range. In those, I'd call them tier 2, tier 3 markets, not in the center of Nashville, but maybe on the outskirts, let's say, where we know like the population in and around Nashville has been growing. So trying to be in that path of progress so that you have good, market characteristics and fundamentals for the years to come. Right. So that's been my focus. And I was just working with my VA on that. We went all in on paring things down, working on our process, making sure we had everything documented so we know exactly if the owner says this, what do we do? If they say that, what do we do? If it's the wrong phone number. So we went through and did a whole flow diagram so that it's all documented well, so that there's no question of what to do come 2023. I want to make sure that all those things are buttoned up. And it felt like a good time to do that because, like we said, it feels like things have slowed down. I mean, people are still doing deals, but it's the volume of like deal flow or transactions does feel like it's slowed down. So it felt like a good time to kind of take the foot off the gas for a couple of weeks and button up our processes and really, firm things up for 2023.
Yeah, I couldn't agree more. I think right now it's like, it's always a good time to buy real estate. There's always a good time. It's just a matter of finding the right deal and getting it under the right terms. But there's no like good or bad times to buy real estate in general. It all comes down to the deal. And there's deals in every market. Sometimes it's just more difficult or easier to find than in other times. So we're in a weird time right now, but also it's an opportunity to catch up on everything, right? It's an opportunity to enter 2023 with like a clean, email inbox, to have all your systems and processes in place, to make sure like your management of facilities is buttoned up and you're maximizing the value out of your current facilities. There's a lot of other like opportunities to really breathe and catch up, as opposed to just like continuing to find the next deal.
Yeah, and I think another opportunity there is building relationships with brokers. So 6 months ago, if you reached out to a broker but hadn't proven to them that you were someone who's doing deals and you're not just going to waste their time, they might not respond to you or might not respond in a timely manner. But things have definitely shifted where, even if I just look at an OM, I'm getting a call from the broker now. Like they've seen that I've been clicking in there and they're like, hey, I saw you checked out this deal. And they're doing that because it's been sitting there for 30 days, 60 days. So now's I think now is a good opportunity to be talking with those brokers and build maybe a lot of those deals aren't going to work because they still want top dollar, that 3%, 4% interest rate supported, 6 months ago. But it's a good opportunity because they probably have more time on their hands and they're probably looking to talk, looking to build relationships as well. So I think there's a good opportunity right now too.
Right. Yep. And just to clarify, when you say OM, you're referring to the offering memorandum, correct?
Right. Yep. Exactly.
Yep. Cool. I guess any advice to somebody who, is kind of in a similar position right now? They're in the W-2 world and they're looking to transition over and they want to do real estate full time. What would you say to, somebody who they don't have, right, the financial means to switch over immediately, but they want to follow a similar path to what you did?
Yeah, I think starting with exactly why you want to do it, whether it's real estate or something different, I think is important. It's really tough to, if you're already working a 40-hour week job, and usually a salary job is not just 40 hours a week, usually it's more than that. And you've got a family and you want to work out and maybe eat healthy, and to do all of that in a day and then add on top of that 1 to maybe 3 hours of real estate or whatever the side hustle is a day is a lot. And so to sustain that over time, you need something in your favor, which I think is why. So for me, it was like, I haven't forgotten what it felt like to go through the tough time where I, burnt out, I was just not motivated to do anything. I knew I needed something else. So for me, the why of the financial freedom and the time freedom kept me going. So I think that's really important. I think also networking and surrounding yourself with like-minded people is another very important thing. So whether that is joining for me, I've been finding success in joining a community. So you join a community of 50 to 100 or a couple hundred people who are like-minded, rather than trying to find them one by one on social media or Facebook or wherever that is. When times get tough, when you're, questioning, should you be doing this because, come 5 o'clock, you don't want to do anything. You just want to chill out. Maybe having a call with someone who's in the same situation as you, or someone who has recently got past that to motivate you or hold you accountable, I think really goes a long way. One thing I found, and I think a lot of people find this, is that once you start doing something that's different like this, not a lot of people understand it. And so the amount of people that you can have this kind of conversation with, like, you and I are having right now, is limited. And so if this is like your new interest in the thing that you're super motivated by, but your family doesn't get it or your friends don't get it, it's hard, because now you're kind of doing it in a silo, unless you have a community of people that you can go talk to. And then you get energized and motivated. I love having conversations like this, because I end up leaving energized, motivated, wanting to go take down a deal or partner or whatever it is. But you got to have those people to talk with that about. And so I think finding those communities is a huge help.
Are there any specific communities that you're in, or that you would recommend, to people to join?
Yeah, so I'm in. The coaching program that I had joined was Rod Cleef's coaching program through multifamily. That was great for me. That was the first coaching program that I had ever joined, and that's where I learned I met the majority of my real estate buddies. I've done all the deals that I've done have been with people in that group. I also joined the Jason Drees group for high performance coaching. So I have a one-on-one high performance coach. And
you do?
With that,
awesome.
Yep. And so
Who's
with that, Peter Warren.
Okay, I've heard very positive things about him.
Yep, I've been working with him for right about a year now. I think I started in January this year, so it's been a year, and it's been great to be able to. I guess that would be another recommendation if you have the means to hire a one-on-one coach, having someone who will talk with you specifically about the things that are troubling you or concerning you or slowing you down,
right?
And focus 100% on you for 30 to 60 minutes is huge. And offer a different perspective. You do the DISC profile, and I'm a high C, which is it's like I'm a 99 out of 100, which
really?
Is like engineer details.
That's so funny.
But they paired me up with Peter, who is not that, and so I hear his differing perspective we meet every 2 weeks, and I get to hear his perspective on this, and wow. I'm thinking about things very detail oriented, and then he'll think about things very different, and then I get his opinion on that. So that's another thing that's really helped me.
That's so funny. Yeah, I'm in Jason Drees' community as well, and I love it. That's actually the founders of this podcast. We're all in the JDC community, and that's how we met. So I took the DISC personality test in the beginning as well, right? And I'm like super high DI. So it's like 99% DI, like in each one of those. And then my C was like super low. My S was, I think, like kind of average. But it's interesting because you and I have talked before just about the whole like visionary and integrator type of roles, right? And that's following like the book Traction by Gino Wickman, and the entrepreneurial operating system, where really you're managing a team and it could be the virtual assistants or whoever it is, by breaking down your like 3-year goals into 1-year goals, into quarterly, rocks, which are just goals, right? Down to like weekly KPIs that have to be met. And it makes things more like black and white, where they meet the metrics or not. But you and I have kind of talked about that, and it's like, like I consider myself very much a visionary, and you were a little bit like unsure. You're like, I don't know, am I a visionary? Am I an integrator? Is that something you have really figured out?
No, I haven't figured it out. I would love to figure it out. I feel like maybe I'm in the middle. I've been working on my vision for my company, and I do have I think a big vision, but at the same time, my background and this high C and the engineering and all of that has lended itself well to me for building systems and processes. And I think the thing that I struggle with and I'd love to figure out is I think I'm doing that work because it's easier for me, but I don't think it's the thing that I want to do all day long. Like, for instance, I'm looking to hire someone to do on the analysis side of things, underwriting. I've been underwriting all my deals. I think it's important to know how to underwrite a deal, at least if you're going to be, at a minimum, if you're going to be making an LP investment. Like, you shouldn't just be taking somebody else's word for it. You should have at least a basic understanding of how to look at a pro forma, the underwriting model, and see what their assumptions are. Like, what are they doing with the cap rate over time? What are they doing with, like, how are expenses and rent growing over time? Like, there are, those percentages have huge impact on the performance of a deal. And so being able to pick that out, like, I think is super important. And so I've done, a couple hundred deals at this point. So I understand it. Am I an expert? I'm definitely not an expert. And I don't want to be an expert. I would rather hire someone to do that. I'm okay to get into the spreadsheet, but I don't want to be there all day long. Whereas I know there's plenty of people who do love to be in the spreadsheet all day long. And so I've been struggling with that because it's my background has set me up to be decent at it and pick it up pretty quickly. But I would rather be having conversations, building relationships, getting out and traveling to the facility. And so it's still a question mark for me, whether I'm a visionary or an integrator. I think I've heard that there's actually like some hybrid in the middle. I feel like maybe that's where I am.
Well, it's funny. Maybe we should talk more about that, afterwards. Because to me, it's like I love analyzing the deals, and that's where I love getting into spreadsheets and really like figuring out a deal, projecting. But my background's finance and accounting, right? So building out pro formas. What I don't enjoy as much is the process of managing the VA who is doing the cold calling, doing the email broadcasts, doing marketing directly to the self-storage facilities. That's kind of like a low excitement area for me. High excitement area is like, okay, we have a potential deal. Like, let's figure out how to make this work, or if it can work. And then let's put together the offer, let's do all that. So, that's interesting.
Yeah, I've learned, at least from my engineering background, so I ended up as a lead mechanical engineer where I had a team of 3 to 4 engineers, and I had a higher level responsibilities like scheduling and budgeting, work distribution, things like that. But I was also responsible for risk assessment. And so any of the high risk stuff I would have to dig into the details on, because it was my responsibility. I was the one signing off on all this. So if I needed to know that the high risk stuff was managed. And so I enjoyed getting into the details on those things and then backing away and letting the team figure out the intricate details. But I liked making sure that at a high level, that was heading in the right direction. And that's what I think I really like, and I would really like in the real estate space too. I don't want to be taking everything from the rent roll and the T12 and plugging it into the underwriting model and, toggling these numbers this way and that way. But I would like to review it with somebody and say, hey, did you think about this? Have we considered this creative finance model? How do we know that this is a good market? And they're like, oh, well, I've already got the property, I've already got population growth. I've already got these things. And I'm just double checking these things. I feel like that's where my strengths really are and my interest really is. So I want to get there. And that's where I'm motivated for my next hire. I believe will be my intention is an analyst, someone who can at least, and I'm not exactly sure how that's going to work. So I need to define that exactly what I want that job description to be. Is it just pulling financial information in without the interpretation, or do I want someone who can interpret the numbers and play with the numbers? Of course, I'm not going to back away entirely because I'm not going to make an offer on a deal until I felt comfortable with it. but trying to figure out that balance, and so that I'm operating kind of within like that zone of genius or really where I want to be. That's something I'm working on right now.
Yeah, man, I can help you with that a little bit too. That's kind of what I've done, is because I love that stuff, is train my team to really get in the numbers and understand them and how to analyze deals. And it's not easy, right? Because you have to hire somebody who's willing to think. It's not like a check the box type of task. It's, you have to put thought into it and figure out things on your own. And every deal is going to be different. So it's not like, okay,
Right.
you know how to do one, you know how to do them all. But I think the other thing is, at the end of the day, you're not like, you still have to make sure they're doing things right. They're going to do the best they can, and then you're going to come back and you're going to correct it, and you're going to show them how to improve, and then the next deal they do, they'll get a little bit better. But it's always going to be a continuing process of, refining that and getting better. But if you can do that, and you can do it with virtual assistants. I have like great virtual assistants who are doing those things for me.
Oh, okay, perfect. That's encouraging, because that's what I'm looking for. And that was, the thing with the virtual assistants is, a year ago I was questioning, should I hire a virtual assistant? Because I didn't have very much income coming in from real estate, not nearly enough to like even replace, like to cover the payroll for a virtual assistant.
Sure.
But the alternative was for me to do all of that work myself while I had a day job. And it just was, we were not going to hit the numbers we needed to put ourselves in a position to be successful. And I took that leap of faith and hired somebody. And I mean, maybe a little bit of luck and timing there, but we found one within 6 weeks. And but we haven't gotten one under contract since. So we were successful on one this year, and that was it was very significant for me, because it allowed me the ability to step away from my day job. But I'm in that same spot again. I was just having the call with my one-on-one coach. I just had I had a syndication that closed, and I got my initial capital investment back, and I thought, should I roll this into a new syndication? And then I thought, all right, well, I'm only going to get a couple grand a year from that, but that would probably be a year's salary for an analyst. And I was like, what? That would be such a higher return on my investment, rather than sticking that into a syndication. And so then once I flipped that switch, I was like, oh, this makes perfect sense for me to hire somebody. If I use that number, if I allocate those funds as a business investment, whereas previously I was looking at what it would cost to hire someone for a year and saying, well, I don't make enough money from real estate right now to justify that. And my coach was like, hey, like, investments in business, sometimes you make an investment and you don't expect a return for 1, 2, 3 years. Like, that's sometimes how it goes. Like, you don't need to just be thinking, well, do I make enough today? I mean, that's like the chicken before the egg thing, right? Like, do you, and I learned that just this year. I hired a virtual assistant before I had the money saved from all, from working for 10 years, and I had money that I could invest, and I chose to invest in a virtual assistant, and we found a deal, and very, very quickly. So this is kind of that similar situation where it's like, should I hire another person? Can I justify it? And it was like, I really think I'm going to get a much better return on my money by hiring someone who can analyze a deal a day, let's say. And if it's something that I don't want to be doing, that's like a great investment for my time, my sanity, and my motivation to continue forward.
Yeah. Well, I'll tell you what, after this, I'll help you with finding a finance accounting VA, and you can help me finding my next cold caller. And
sounds like a fair trade.
Yeah. Mindset, with the JDC stuff, I guess just want, because mindset is a huge part of this podcast, is a huge part of my company, Maven Equities, and what we do. And one of our core values is abundance, and is having that abundance mindset. And you're in the JDC community. Can you just touch on that and just tell me, how important that has been for you, and especially in times like right now, where it's a tougher economic environment?
Yeah, I would say mindset has been huge for me. Before finding real estate, and when you find real estate, a lot of people are in the personal development space. They're working on their mindset, they're working on their health, their fitness, and all of this. And so I kind of fell into that and it was great for me because before real estate, I definitely had a limited mindset. I thought that rich people were lucky or did something that I wasn't willing to do, like ethically or morally, to get that way. And so whether it was luck or it was something else, my thought was, well, one day I will get lucky, and then I'll be a millionaire. And it was like, I wasn't taking accountability or ownership for myself. I had that limited thinking, and one day it clicked for me. We went on like a weekend trip away, and we were parked by a marina, and I saw these huge boats, and there hundreds of them, and I was looking at them like, these are all like 6-figure, 7-figure boats, but there's hundreds of them. People own these things. Like, why can't I? Like, I'm definitely not on the path right now to being able to, own one of these even if I wanted to.
Yeah.
And so I still remember that. That was like 2.5 years ago. I remember sitting there just thinking like, something's not right. Like, there's people that own these boats. Something's not quite right here. And that's what really spurred me into like the mindset work, and surrounding myself with the right people who were working on their mindset and saying, hey, like, that's a limiting belief. Like, you absolutely can go do that if you want to. Like, I'm nothing special. You hear so many people that are successful say, I'm not doing anything special. I'm not like extremely smart. I'm not extremely this or extremely that. I wasn't gifted this. I just showed up consistently every day for 10 years, 12 years, 15 years. And it took a while. Exactly. And some it's quicker for some than others, but they get there. And it's that consistency. And so for me, what I did was I started listening to podcasts instead of music. I started reading books instead of watching TV. I used to play, games on the phone or whatever, and I started reading more. And so I was just doing everything I could to try to replace like kind of unimportant things in my life with more things that had a better return on my time investment.
Right.
And it was surrounding myself with like, even like podcasts like this, obviously I wasn't friends with the person that was, on the podcast, but it was like I was surrounding myself with that person and hearing what they did and how they overcame those challenges. And I learned so much so quickly through that. And that really helped flip my mind to say, this is possible for me if I show up every day and I take deliberate daily action. This will be possible for me.
Love it, man. You couldn't have said it better. I boil it down to 3 core values that I have in Maven Equities, and one is abundance. Like, there's an unlimited number of deals, unlimited amount of money in the world, and there's deals for everyone. Everyone can do deals, and so it's not, you have to stay away from that scarcity mindset of trying to hide yourself and like what you're doing from the world, right? Or afraid of, hey, everybody's going to steal what I'm doing or take what I'm doing. And you as you get more experience, you realize that the more you share, the more you're open and honest, the more you help others, the more everything else comes into place and you get more done.
I mean, I've seen that firsthand. So we've talked about the systems and processes. And so, I had shared with my real estate community, like, hey, I put this system and process in place. I hired a VA. She's made 13,000 phone calls this year. She's, wow. It's thousands and thousands of phone calls. We've built a list of thousands of storage facilities just in 1 year. And I was working full time while all of that was happening. Yeah. And I was managing that, but it was very low effort weekly on my part. It was 30 minutes, maybe 1 week was an hour, but just like the managing of all that was relatively low because I had put a robust system and with processes in place to support that. Yep. And so I was like, there's something here. Like maybe I turn that into a course one day. Maybe I'm not really sure. We'll see what happens. But I thought, you know what, there's something here that I should share with people. And so I put together a slide deck, 20, 30 slides of showing how I did what I did, which it's nothing innovative. It's not, it's not groundbreaking, but it was just taking, your CRM and a dialer and Google Drive and a virtual assistant and integrating all those things together in a logical format and documenting it with, awesome. Screenshots, recording myself on the on video and the screen to show exactly what to do. And I shared that, and everyone was like, "This is fantastic!" Like, and now people come to me for that, and they ask for. It's like, I know that it's like we're not competing. There's an unlimited number of deals. I might as well share this. Like, what I did, like I could. It took me, weeks to get that. Probably, I don't know how many hours, 100 hours, 200 hours to do that. But now that it's done, somebody else could probably implement that in 5 hours. So
Sure.
I might as well shortchange that for them.
Yeah, and then those people are going to bring deals to you, right? It's like, who do you want to go to partner with stuff? It's like, all right, like Brandon taught me how to do all this. I trust Brandon, right? A lot of it's like Brandon has integrity. I found a deal. I'm going to go bring it to Brandon, and that's how the world works. And so integrity is huge, and then also persistence. I mean, 13,000 calls, right? And you said you had Nest in the past year or year and a half, and you've done one really solid deal. People think that they're just going to call self-storage facilities for a day and then it's going to happen. No, I mean, you've called 13,000, and those were off. You're finding off-market deals that way.
And just to clarify, it's not 13,000 unique facilities, but when you skip trace, you get 4 or 5 numbers, and you got to do the work to get through to find out which one is the one that actually the owner's going to pick up. So it's a lot of that, but also the thing that it's like an asset, right? Like, I've got this list, we've been refining the list and figuring out what number works, and over time, that's going to get pared down so much, we're going to continuously get more efficient. We don't have nearly those numbers to call anymore because we've already done the work. So it's just going to continue to improve over time.
Yep. Awesome. So just a couple more questions here as we wrap up. Any book recommendations as well as tech recommendations? I love to ask people, these questions just to see what they're reading and, any cool tech that they can share.
Yeah, so the book that I just finished reading recently is called Real Estate by the Numbers, and that was, I think, published by Bigger Pockets with Jay Scott and Dave Meyer as the authors. I was really interested in that book because it goes into things like how to read a balance sheet, how to read a personal financial statement. I already knew how to do to look at a P&L, but it went into those details. But also it looked at what does ROI actually mean specifically? IRR, AAR. We use those terms all the time when you look at a syndicator's offering, right? And they're
return on investment, internal rate of return, average annual return. Yep. Okay.
Exactly. So you're going to get, we're going to get 8% cash on cash return. What does that mean? You're going to get 15% IRR, internal rate of return. But what does that really mean, and what goes into it? So I knew what the targets were generally, as you see enough syndications, you see that most people are looking for 15 to 20% IRR.
Yeah.
But what does that even mean? And then which of those numbers would I actually compare with the stock market? When you hear the S&P's done 7% over the last 100 years, which one? And so, I mean, I started realizing that I didn't know exactly what those numbers meant. And how to compare, if I had a deal, let's say I wanted to lend money to somebody for 30, let's say I was going to lend 10 grand for 30 days and they were going to give me 12 grand back. So I was going to make 2 grand in 30 days. How would I compare that to if I wanted to lend, I was going to make 5 grand in 10 days on a deal? I wouldn't know how to answer those questions, but this book goes into all of that. And so for me, being a numbers person and know in details, I really wanted to better understand that, and so now I've got that, and it's a great thing that I can continue to refer to.
Awesome.
So I like that book. Very detailed though, so it's a heavy book. It's a heavy book, so it's less concepts. I mean, you're getting into very detailed numbers, percentages, and things changing over time, value of money, and how the numbers change over time. So there's a lot of numbers in that book. So
it's probably a good thing too, as you build your team, right? To have your team read and fully understand, because they need to know those things as well.
Right. Yeah, and so you had asked about a tech recommendation as well. So one app that I use is called Strides. It's I started using it about a year ago. It's for habit tracking, and you can do a number of different things. if you want to drink a certain number of cups of water a day, you can enter that in there. If you have a goal of saving a certain amount of money by a certain amount of time, you can have it break it down so it shows you like, oh, you need to have $200 at the end of week 1 and then 400 at the end of week 2, and you can enter in where you're at and see like, oh, I'm actually behind, and so for me to catch up, I'd actually have to do $250 a week for the next 3 weeks to hit my number, or whatever it is. So I did that because I was trying to gamify my habits. I wanted to, like for instance, I was doing the Miracle Morning, and I had a streak of 490 something days, and it wasn't the streak that was necessarily important, although I didn't want to break it. So it was motivation for me to continue. And I could see, I've done this every single day. Like I definitely don't want this to end. So it was almost like gamifying it. So you can put whatever it is that you want into that app. And so I've been using that.
What are your main focuses on it for? Like, what is it, like specific, like exercise, or like what are your top couple, habits in there, goals in there that are important to you?
Yeah. So it was, Did I do my morning routine or not? Did I drink a gallon of water today or not? And you could, break it up into however many cups you wanted. Did I plan my day for the next day? So that was important to me because I felt more at ease at night when I knew my day was planned for the next day. And so it was like I woke up and I just had to follow the script as opposed to what am I going to do today? So I tried to put, the 5 to 10 things that I thought were really important that were not quite like habits for me, and put them in there. And then at the end of every day, I'd go in and say, did I do it? Did I not do it?
Love it. I'll have to give that a shot. I really like it. Awesome.
Yep.
Cool. You also mentioned, I think you had talked about too, Think and Grow Rich, right? By Napoleon Hill. I have that,
Yep.
on my bookshelf. Haven't read it yet, but I think it's very much that gets into mindset and stuff as well.
It does. So that was one of the first books I read. One of the first books that I had read. It's a pretty heavy book as well, but I really like it, and it's the only one so far that I've read every year since I read it. So I'm reading it now. I heard a different investor said he reads it every beginning of every year or the end of the previous year, so that he can just get his mindset back where where he thinks it's like fine-tuned and whatever it is. So I've been reading it right now as well. So I usually try to read it at the end of every year to just get myself in the right headspace for the next year.
Cool. All right, Brandon. Well, this has been awesome. Where can people reach out to talk to you if they want to connect?
Yeah, I'd say Instagram. My handle is @RealBHicks, so you can go there. I'm also on Facebook. You can find me there, but I'd say the best place would be on Instagram.
Instagram. All right. So Real B Hicks. That's BHICKS.
That's right.
Awesome. Oh, and then your website too, right? It's is it ridgelinewealthgroup.com?
Yep. You can go there as well. www.ridgelinewealthgroup.com.
So you can go in there. You can schedule a call. Looks like invest, contact.
Yep.
So that sounds good. All right, Brandon. Well, thanks for getting on here. I think we talked about a lot. We learned a lot, and it's just been good having you on. And happy holidays here. And we're gonna, I think, enter 2023 in a very positive way.
I hope so. Yeah, thanks, Sean. Thanks for having me.
Well, there you have it, ladies and gentlemen. Another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.